The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
All to another exciting edition of the Power Trading Hour with me, your huggable, I am huggable, host, the koala bear of Wall Street, just eating my small eucalyptus leaves, just chewing them. Not a wolf of Wall Street, a koala bear, just huggable, cute, fuzzy. Anyway, another wonderful day here at TFNN. We've got a market that, what can you say about it? We're at, up 3-4 points on it. In fact, we'll get into that in a minute. But not a lot going on. You'd want some kind of continuation after the last few days being down. And not really getting it today on a Friday. You'd think if everybody was all freaked out, we'd see farther downside into the close, and we can still see that. I mean, we're up 4.5 points on the S&P cash. So the question is just how frightful is the market? And the problem I have is to be short this market is going to be somewhat dangerous. And we'll explain why, but I think if you looked at some of the stocks popping this morning, you will understand. But in the meantime, we're going to get to our histoire. And, of course, on this day in 1991, the New York Stock Exchange began basically after-hours trading. So you could start trading. I think it started, if I remember right, started from 4:15 or 4:30 to 5:15, and then it graduated all the way from 4 o'clock to 6 o'clock, and then they opened it up at 8. And it's this kind of been encroaching from about 8 to 6, and probably for the better. At least you get a little idea of what people are willing to say and sell and or buy before or after. Certainly became a huge issue after hours trading when the tech bubble came. Of course, fortunes won and lost in 5 minutes in after hours trading in 1999 and 2000. I made a lot. I lost a lot during those days, but on the net, it was very exciting and almost heartbreaking, depending on what you were doing. And of course, I think I probably would stay away from it these days. I think it probably used a lot of energy where I could have made money on some other things and made more money on other things. And I think maybe that's the maturing of any trader out there. He sees all this money and yells and screams and says, there, it's all out. I got to get it all today. And unfortunately, you wear yourself down and make bad decisions. Need to have good rest, need to take vacations, need to do everything, and if you're going to trade 24 hours a day, you're probably going to crash at some point and make a really bad mistake. So make sure, get good sleep, take vacations, have interest outside of the stock market. Of course, today, Open Table was bought by Priceline. It soared 47% at the open. I don't know what it's at now. Probably still at 103. The online travel company Priceline bought it. Priceline didn't go down much at the open. And agreed to buy Open Table for $103 a share, significantly above the stock's closing price of $70.43. We've seen a few of these out here the last few days. My guess is we're going to see a great deal more of them. I don't think that markets has any huge upside out here, but I do worry about being short, especially any of these stocks that have high short interest. And somewhere on here is it. There it is, Open Table. Open Table has, or did have, 6 days to cover on the last entry. That was, just about 11 days ago. Normally, you're not going to see that many shorts come in and out of a market, especially with the movement that OpenTable has. What we do know, there are a lot of shorts that are fried today. One of the things is don't be short a quiet market, and we'll get into that later too. But I think that kind of set part of the tone today. We had some stocks miss. Finistar got blown out of the water. It was like $26, and it was under $20 when I saw it last night. This company, when you see big misses out here, it's kind of interesting to see what sector and what they do. That's the reason I watch a lot of these stocks at earnings, to see how people and how the stocks react to the news, what the actual news is, and what they're saying about the long term. Not the short term, the long term of how at least their sector's doing. I may not be playing them, but the tone and the broad brush of an industry, interesting to see that this company is in optical subsystems and transmitters, receivers, transponders. The question is whether or not it's the whole sector or whether it's them themselves. And I haven't sorted this out yet. I dislike all the stuff. Okay, in there. Come on, get a room. Anyway, we've got stuff going on in the engineering room that has no business being in the engineering room. I'm going to state that now. I'm going to put up a mirror here so they can see in there. That's what I'll do. So anyway, we've got some hanky-panky going on in the engineering room that shouldn't be going on in there. Personal displays of affection. And now I'm ratting them out live on air. Anyway, when we get back to Finistar out here, we've got to have a little bit more interesting, but there's just as many stocks blowing up as down today. Generally, I would say that OpenTable's buyout is probably 6 stocks up on that news. One of the other things I wanted to get to was a reminder of next week. On June 18th and 19th, we've got a 2-day FOMC meeting. The announcement's going to be on Wednesday at 12:30. And we've got... we don't have a lot of volume today, even in the huge downturn of yesterday's move, where we're down 15 points at one point. There was only about 3 billion shares on the NYSE consolidated tape. That is the AMEX, everything traded at the NYSE, and the shares traded on ECNs that are listed on the Amex and or NYSE. If you're on the, and I hate to do this, but just so everybody knows, if you're a real street guy, you don't call it the New York Stock Exchange or the NYSE. You call it the Nancy. And probably Rye don't call it that. NYSE, Nancy. Anyway, we didn't have a lot of volume today. Yesterday, don't have a lot of volume today. In fact, let's take a quick look at that. 1.5 billion shares. We did go kind of to a lower low out here. I would like to see this market, if I'm kind of short-term bullish, long-term bearish right now. And any close back above 1938, again, would have us back into the trading area. We could just tread water and go sideways for another week. I don't think we have a lot of downside before next week's expiration. Options doesn't look like a lot of people were changing their minds over the last day or so. We did have a little bit more volatility come in, but for the most part, options were not telling me that everybody's expecting the next week to be rather radically down, and that we have about under 1.6 billion shares. Tells me that Monday probably going to be light, Tuesday and Wednesday probably going to be vapor. So one of the old sayings out here, and I thought I had it up here, that's what it was right there. Don't be short a quiet market. And that's why quiet markets have a tendency for shorts to pile on and get blown out. And that's one of the reasons that little chestnut has been around the market for a long time. So I'm not radically bullish here. I think we could go up to 2,000 on the S&P cash on a no-volume summer that will probably drive us all batty. But there's going to be certain opportunities. They say flying is hours and hours of boredom with 30 seconds of sheer terror. And my guess is that probably is going to describe a lot of the trading in the near future. That is, you're going to want to be sharp for 30 minutes where there's going to be some severe active momentum in the markets, and then we're going to go back to a very light volume. And I think that light volume continues probably into the 4th of July. I think we've set up the character for at least the first half of summer trading, and it's going to take a lot, I think, to get us out of this. But 3 billion shares, not enough really to break us down, that we're down at the lows, and we're down at lows earlier today. And that we're going to have extreme lighter volume today continues to make me think short-term bullish, long-term bearish. Yesterday I heard a lot of stinking thinking all over the place, and occasionally even around my realm. I'm going to call it. I always like it when people say, I had the realm, like they're a big English king or something. Anyway, one of the things that I wanted to talk about was that we can never tell anything that happens in a vacuum. Yesterday, everybody was telling us that the market was going down because of Iraq. Now, the question is, if Iraq didn't happen, would the exact same thing happen in the market? Is everybody just pointing Iraq as the likely suspect? Well, there's no way to prove it. I guess we could take studies and ask why people sold and bought different things, bought energy, sold everything else yesterday. But the question is that there is no I can't even say it, no alternate reality. There are no two ways that we can go to scientifically test it. And when we get heavily invested in one idea, it's problematic. Now, yesterday, I thought the real news was that the Bank of England did something just before the start of the World Cup games yesterday. He issued a warning that people have been waiting for years. He said that the rate hikes will come sooner rather than later. And the market was already weak before all the Iraqi news really started flooding through yesterday, and all the pundits started getting out. So the question to me is, Iraqi news not any better today. Market's not really taking a slaughtering. Was the move really yesterday about Iraq? Or was it about higher interest rates, at least in England, maybe before the end of this year? Now, they're going to cage a lot of this in various language of Fed speak. But to me, the long-term problem in the markets is probably higher interest rates, not what happens in Iraq. We'll be back in a minute. We'll talk about more alternate realities, because I heard some people also spouting some stuff that was flat out wrong, and we'll get to it when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Yesterday, someone in the den, maybe somebody said something on the radio. I can't remember what it is now. I can't remember everything. Anyway, yesterday they said that there were no weapons of mass destruction found in Iraq. And I wanted to set everybody straight because, of course, there's a lot of debate on whether we should have ever gone in there. Well, American troops found 550 metric tons of yellow cake uranium in 2003. Of course, shortly after that, everybody yelled and screamed there was no weapons of mass destruction. Well, we didn't find out till 2008, until they'd basically been able to sneak all this yellow cake out. They were the generals were highly worried that they'd have huge amounts of Al-Qaeda coming in trying to steal it. To steal enough of it. The reason why is Saddam Hussein had enough uranium to make over 100 nuclear weapons. He also had the tubes, and to actually make a nuclear bomb that does go off is not that tough. Make a good one is tough, not to make a bad one. Within about a mile of where all this yellow cake was found was a building that was at one time had all the centrifuges in it. We had bombed it. All the equipment had been taken out. No one knows where it eventually ended up going on to. But Saddam had a burgeoning nuclear business going out there. And if 100 nuclear weapons is not weapons of mass destruction, I don't know what is. And again, for those people that probably don't know a lot about nuclear energy or power, making a nuclear bomb is not tough. Coming up with the uranium and uranium-235, where 1% of it, or maybe 2% of it, depending on where you find the yellow cake, is going to be the kind of uranium you need. You need 235, and 98% or 99% of it is 238. It's all about the refining. And you can actually make a bomb with about 23% 235. Not going to do much, but blow a lot of radiation around, kind of what that people call a dirty bomb. Most of the bombs that we make here in the United States are somewhere between 85 and 90%, 92 at the highest percent pure 235. But there was everything there to make a bad day for the rest of the world. For a man that had 300,000 people in a pit, in one single pit, had 300,000 bodies. So it wasn't like we all went there and we found Mr. Rogers out there in the middle of a desert. I think it's far too easy and flip to say we shouldn't have gone in there. Decisions like that are not easy. And in an alternate reality, what do you think 100 nuclear weapons would do in the United States? 40 million dead? So it's all easy to be Monday morning quarterbacking. But the next time I think I hear somebody say they didn't find any weapons of mass destruction, I think I'm going to scream. If the FBI showed up at my house, found a bunch of 1-foot pipe lengths with ends, with with fuses, and 10 or 100 pounds of gunpowder over on the other side of the room, even though they weren't all put together, I'll guarantee you they'd haul my rear end off. And I think that's the equivalent we had. We had with Saddam Hussein, who a pretty nasty guy, willing to kill at least 300,000 people and put them all in the same pit out in the desert, with uranium, with the ability to refine it, and with the ability to build missiles and buy missiles to do evil. So it wasn't quite the easy decision that everybody had, that there just wasn't anything there and we're all screwed up. I think about the alternate reality today of a Saddam Hussein with nuclear missiles pointed at us, other people. Could you say that all the people in Israel would be wiped off the map today? I cannot say it. Again, just like the early part, we can't take two different roads down. But I know with him out of the way, we do not have to. So that's my little, that's my opinion for the day. We'll get into stocks after this. It's easy to go Monday morning quarterbacking. I'm just glad there aren't another 100 nuclear weapons in the hands of some evil and insane people. We'll be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And just one more thing, and then I'll get off my high horse here, and that is in alternate realities. Once you have fairly refined uranium, basically, if you have a gun barrel, like a gun barrel from a tank, maybe a little smaller, it doesn't take much but to form the uranium in a slug and fire one slug of uranium at another slug, and use like some C4 at the back to actually do it down this long pipe. When the two hit, you put a beryllium shell around it, and you're pretty much going to get a nuclear bomb out of it. So I think this design was used at Nagasaki, and wasn't used a whole lot after that. But it took them about 3 months to design and build it, and they were so sure it was going to work, they didn't even test it. So if you're thinking about bad days out here and things happening in the future, it's pretty easy to build a nuclear bomb, or atomic bomb actually. Much harder to actually refine that uranium, and that's where you have to stop people, because it is far too easy to build one. Anyway, just thought I'd bring a little sunshine into your life. Oh, isn't that nice? It just ticked me off yesterday when everybody started saying that, because I knew it wasn't true. There were huge weapons of mass destruction programs going on, and nothing more than an atomic bomb to do that. We had some stocks moving out here today. Actually, I wanted to get into those, and I movers. I picked up the wrong list, I think. ARO, Aerospatial, was that it? No. Express, that's what one of them was. I wanted to take a quick look at this. This is a clothing company and one of the few out here that actually popped with some volume. And again, this is problematic for me being short, at least for the next few weeks. I'm seeing a lot of these little companies out here that have been rather horrible businesses to be in. In the case of Express, they're, I guess, a mall retailer of younger kids' clothes. And I heard somebody joking about them being a, what would you say, a retailer of kids from 19 to 19 and a half. That they were so focused on teens that even younger teens wouldn't go there and people older would not. That they apparently have changed a great deal of this, but this thing pretty much got blown out down to the $11 and what is that, 80-cent level, just a few trading days ago. But another one with a huge short position on it and popped up. And it is not uncommon in a bearish market to see this. But my guess is that, again, the rest of the market's still fairly light volume. If we don't see volume up off some of these, then we are probably in the part where it is dangerous to be short just because it is such a quiet market. You start seeing a lot of these stocks out here pop up. We talked about Finistar earlier, and that's where I really haven't figured out exactly where the total weakness is. Is it in this sector? Is it in this stock alone? I really didn't see a whole lot in other stocks reacting too much. So I'm going to assume for the moment that it is Finistar's problem and its optical internet business. There has been a nice gap that's acted as support for a long time. That gap actually started on August 7th of 2013. This thing gapped up with about 8 million shares. We are back into that gap today. The first time we tried that gap was December 2nd, $19.43 with 3.6 million shares. You had a nice run back up to the top. I didn't see a whole lot in here that would give me an indication that everybody was expecting the wheels to fall off. In fact, a lot of the news coming out of Finistar had been fairly good. I didn't like the last few days of volume. I'll zoom in here a little bit. But the whole market was like that. Thing blew apart. It has gone into that gap. It's blown it away with volume. And the next real big day down in Finistar goes back to about, is that about 16 bucks, I'm going to say. Maybe 15 bucks. What is that? 15.80. So you've got a little bit more to go out here, but you've already blown through all the recent support, and that 15 bucks is looks like it's well open. Now you got some support around that $17 from the previous highs, and that's where the actual breakout started to happen. So you're probably going to find some congestion at 17 bucks and maybe a bottom at 15 if this thing continues on down. I was going to show you something and I forgot to do it in my slide deck. Maybe I can turn it back on here because it was very interesting. Wanted to look at Groupon, of course, because all these companies were popping today, and see if Groupon had a snowball's chance in where of ever coming back. I figured this company was dead for a long time, but I'm pretty sure that the thing is truly dead. If I can find my slide here that I didn't show out. Is it still here? There it is, right there. Okay. This is the ad that I got last night from Groupon. It is colon hydrotherapy session. And I can only guess they're going to put a hose somewhere inside me and fill myself full of water for $29. To me, when you're kind of down to that level of taking hydrotherapy, colon hydrotherapy, is that even a real thing? Maybe someone could call in and tell me. But is Colon hydrotherapy must be a real thing. I thought it was a put-on for a little while. But I tell you what, I'm not real positive on Groupon. If they've sunk to the level of putting a hose somewhere inside me and selling that. Anyway, pop up, a little bit of volume out here today. It is, it took me like 10 minutes to actually believe that was a real ad. I thought it was a put-on. But it wasn't. I checked it out. It was real. So anyway, this thing's back up to the gap. That gap had huge volume down. What was it, 71 million shares? We've got 23 million shares. This is going to probably follow the same path that Radio Shack did. It's not going to be that amazing to me to see this thing head lower. And that is... it's going to flop around a lot like a dead fish, or almost dead fish, on the dock until it actually expires. It's taken a couple of years for Radio Shack to finally know that it's not just mostly dead, it's pretty much all dead, just not quite dead yet, if you're fans of The Princess Bride. But not enough out here, and this is probably where you're going to see this thing top out in the near future. I just don't see anything changing. When this IPO came out, I was on the show with Tom O'Brien, and we discussed the amount of ways we hated this business when it was coming out. And pretty much all of them have come true. So we'll look at it. Grubhub, all these companies that have internet presence with big back ends that are in the cloud. That sounds kind of bad. Big bad ends. Anyway, this thing, they popped up. They kind of rolled off a little bit, so there isn't a whole lot more in there. We talked about Intel a little bit. I'm going to talk about it tonight on the Tom O'Brien Show a lot more. Of course, this thing popped out. Been hearing for the last 6 months or a year that the PC was dead. And, of course, we've been talking on this show and on the Tom O'Brien Show on the Tech Insider Hour about the XP issue with them actually not supporting it any longer. And it's pretty easy to figure out that they've been doing well. I know I bought a very expensive PC this spring. I know Steve Rhodes just bought one. Just everybody I know is still buying them. So the whole idea that everybody's going to do everything with a tablet, I think pretty far off. Anyway, they're saying PC sales are pretty good. I think HPQ also popped with this news, if I remember. Pretty nice day out here for HPQ. In fact, you kind of almost have to look at this thing being a breakout. And what you want to do is look at that volume. You had basically 25 million shares, and you wanted to see that today. But 14 million shares, I don't think is going to get it done. And one of the reasons we want to look at it. You can give me a call, 877-927-6648. Anyway, what else do we have going on here? Live Nation probably also popped on the whole Priceline deal, but tell you the truth, this one looks like another one that is going to die probably a much needed death fairly soon. This thing pretty hard. You had an automatic rally back here, but it's pretty much giving it up. You might find support back down here at 227, but it's going to be somewhat problematic. Yelp, another one that was getting the big push from Open's deal out here. This one would be the one that I think is probably most problematic in coming up with any kind of real long sustaining issues where it's going to get bought out or someone's going to come by and green mail them out of business. But it did pop up, fairly decent volume on a very low volume day. Of course, the biggest problem I have with this company is that anything you say you can get sued for now, and it's become extremely popular now to sue people that say horrible things about your restaurant. They've lost 3 or 4 cases now in federal courts on whether or not they can keep the people that actually review restaurants, that kind of stuff, private. and they've lost every time. So I'm pretty much going to say that there's not going to be a decent chance that that's going to change, which means that if you had to watch everything as close, you're not going to sit there and rip apart the restaurant. In fact, I just read another lawsuit that went through where someone just eviscerated a restaurant, but there were basically two restaurants with the same name. There was one like on 42nd Street and one in 65th Street. One was inside in a very upscale restaurant. The other one was like a outside restaurant, and it was both. Unfortunately, this company had two restaurants. One was kind of like a outside bistro with low-grade food, like hamburgers and that kind of stuff. And the other one was this high-end restaurant. Well, the reviewer went to the lower-end restaurant expecting it to be the five-star French restaurant, wrote a scathing review, and ran the people out of business very quickly. And I think they got $350,000 out of these folks. So you have to watch out what you write online in these reviews. And lawyers have seen how many of these cases have gone to trial and been won by the litigants. And it's, of course, a lot of lawyers out there with no jobs. They're willing to sue just about anybody for anything. So just keep an eye on it. Zoma, is that another one? Didn't do much out here. Let's look at some of these stocks that were testing highs, because I want to see how these things are reacting out here today. We've got a lot of these stocks that have tested these highs with light volume, and they're still hanging up here. And that is problematic if you are bearish, which I kind of, at least medium term, long term am. Activision Blizzard, of course, we've had the E3 conference going on all week. That is the convention for games. Activision Blizzard, of course, big games manufacturer. Been watching this thing basically test its previous high. We got the high of 10 million shares back up here, and we really need about 16. So some of these look like they could come off with no problem. Trying to look at what are the other ones. Wanted to look at Slab here today and see how this thing worked out. This one was coming back after its gap. This Silicon Laboratories, of course, had a big buyout this week in the semi space. Really didn't add a great deal to this in a single boom, but it is back in this area. Same gap down on the 29th of April with 1.8 million shares. Last 3 days, 422, 371, 244 today. A lot of these don't look to me like we're going to see a lot of upside, but there's only a handful of these stocks. It's not like I'm seeing 200 or 300 stocks up here at highs and seeing the market roll down and get blown apart. And I have seen that. We've seen it in a lot of the different moves, especially moves in, I think it was 2000. Was it 2004? I'll have to remember. I'll have to go look at those charts again this weekend. Anyway, we've got plenty, but I don't think we have enough. Let me put it that way. We'll be back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
As we come back, it is, we were looking at Silicon Laboratories. Can I get just a little bit more in my headphones? It's just enough to be disturbing and not enough to actually hear myself. So there we go. I think that's a little better. Anyway, we wanted to look at a few other stocks out here. I did want to bring up the volume here before we get too much farther. We basically, do I need to update this? Has this stopped updating? No, it's just the volume stopped updating, probably because there's not a lot of volume. We're up 5 points, 1.75 billion shares on the consolidated New York Stock Exchange tape. Compared to that 3 billion shares yesterday, I really think it's going to probably take 4.5 billion shares to really break the spine of this market. We still have not seen that on any single one down day. Now, could we get it? This market is brittle. One of the reasons why I only have one long in each of my newsletters right now. I think that I've got positions that should be fairly decent to withstand the selling pressures if I'm wrong. And I have a feeling that at least one of them has the potential for a buyout. The other one, I think, has got a long-term potential. And I like it here. Maybe things won't work out. But I think both of them are showing pretty much what I expected. So not too worried right now. I wouldn't be going long the farm at any one point. Like I said, short-term bullish, long-term bearish out here. The thing is, we're going to need to get to some kind of level where everybody just says no longer. This will not stand. But I think that's going to be 2,000 on the S&P cash. It's hard for me to see that we don't go up and tick that number and maybe a higher number on the Dow to get this market to roll over, especially when we start seeing good news like the good news from Intel out there. Intel is a big stock, no doubt holding up a huge amount of this market. But I think that could go on all the way to July 4th. So, and before any kind of major correction out here. 15 points on the S&P cash is not going to get me all hot and bothered. Had somebody ask in the den when some of these restaurant stocks were going to roll over. Some of them and some sectors have, but we didn't get what I want to see, and that is once you have a top, you have a top on light volume, you should be able to see volume come in and a sign of weakness within about 3 days. Yum Brands is one of those restaurants. 7.5 million shares on April 23rd. $79.70. We went above it. We've closed below it. You've had 3 days. Volume really hasn't picked up to any kind of volume that would make me think that things are happening here. And instead of just looking at the indexes, I do tend to look at a lot more stocks themselves than individual, than just the broad markets. And wherever I look, even in these weak sectors, I'm not getting any kind of follow-through. Like I said, when we looked at the Finistar, that the rest of the stocks in the sector really not getting affected that much. So when we do have these blowouts, they're really not infecting the rest of the sectors that they're in. And that makes me think that there's maybe a little bit more room to the upside in this market, and it may just be extremely painful and then very profitable when this market turns. Anyway, I'll be on the Tom O'Brien show in the 4 o'clock hour today. We'll be talking about a lot of technical things happening this week in tech stocks. And I remind you to sell when you can, not when you have to, and to catch me here on channel 14 on Tiger TV. Same bat channel, same bat time next week.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.